Welcome to another episode of Business Morning on Channels Television. Good morning. I'm Ini John Mekwa. Well, let's start with update from the global oil space. Oil prices dropped for a second session today under pressure from an unexpected rise in U.S. crude stocks that raised concerns over demand after prices rallied to multi-year highs. U.S. crude slid 0.43% to $77.10 a barrel after the market climbed on Wednesday to $79.78, the highest since November 2014. Gasoline inventories also rose while distillate inventories were down slightly. Global oil prices have jumped more than 50% this year, adding inflationary pressure that could slow recovery from the COVID-19 pandemic and impact consumer demand. Natural gas and coal prices have also climbed. Well, a bit of good news for Nigeria as the World Bank Group says that it now expects the economy to grow by 2.4% by the end of this year. And that's in contrast to 1.8% growth forecast made in January. According to its latest Africa's Pulse publication, the global financial institution attributes the upward revised outlook to accelerated growth in countries' service sectors. Meanwhile, the World Bank warns that the sub-Saharan Africa's economy recovery is still fragile despite its rapid exit this year from the global recession of 2020, with a 3.3% growth outlook for 2021 due to subdued investment, while growth for 2022 and 2023 is expected to remain just below 4%. And the Nigeria Export Promotion Council has announced plans to empower 50 Nigerian enterprises with grants worth 400 million naira. The plan, according to the Executive Director of NEPC, Mr. Olusegun Awolowo, targets market inclusion, access, and export trade facilitation. Speaking at a meeting in Abuja, Mr. Awolowo expresses optimism that the passage of the Nigeria Startup Bill will improve the nation's exports.
Very important to us is the passing of the Nigerian Startup Bill. We are providing support to drive the advocacy to ensure that the Nigerian Startup Bill is passed by the end of the year. We believe that all these interventions will have a positive effect on the Nigerian economy, prepare Nigeria for the future of trade, and help to build an army of non-oil exporters. In preparation for the future of trade, which is really going to be driven by innovation and services, NEPC, in partnership with the Nigerian Information Technology Development Agency, NITDA, is creating opportunities to expand the country's digital economy through the Outsource Nigeria initiative. The Outsource Nigeria initiative will train Nigerian youths on high-in-demand skills and connect them to cross-border opportunities across the world. This will go a long way to reduce unemployment, increase foreign exchange, as well as increase the global competitiveness of our workforce.
Export inclusion.
We have keenly admired the work that the Tony Elumelu Foundation has been doing with entrepreneurs across Africa.
Well, in other developments, airport and air navigation services providers in the United Kingdom, South Africa, European Union, Ethiopia, and United States may have concluded plans to increase their charges by at least 950 billion naira. At a time when the aviation industry is struggling to recover from the pandemic, this sounds scary. To help understand why this possibility is coming up at this time, we have consultant in the aviation industry and managing partner in Aglo Aviation Support Services Limited, Mr. Tayo Ojuri, joining us for this conversation. Good to have you, Mr. Ojuri. Good morning.
Good happy morning to you.
So why do we have this? One would have thought that prices or costs will be, being tapered so that we will have more travels and the industry will recover faster.
Yes, this absolutely will stall travel, and it would actually forestall interconnectivity within travel sector. But what we've seen is COVID let lots of the airlines, the airports, this air service navigational providers, they lost so much money. And the bottom line is they want to recoup the money that they've lost in the in the last few years, a year or two. Because if we backtrack this, we saw that aviation was the first to get hit in March 2019, and we got closed down totally for over 6 to 8 months before we started coming back. Even till now, we still have lots of travel restrictions across countries. So we don't have lots of opening up across intercontinental. We see the trends where we see national travel pick up, but the international and continental travel has not picked up yet. For example, we just seen US open travel to Europe, which is the biggest travel market intercontinental, just in October, November. That's going to start now. We still see China restricting lots of the traffic to people coming there. So we still have lots of restrictions for travel. So what should be done for all the service providers and the airports so that they're not showing that they're monopolistic in their approach is to actually have reduce their cost and be actually receptive and dynamic with working with the airlines and other travel service providers.
Okay, so please help us to understand, is this just about Nigeria? What does it mean? Flights going from Nigeria to these countries, to Europe, to UK, they have to pay more for the services, which of course we know eventually the consumer will have to pay for. But help us to understand the scenario. Is it that when they go there, the charges would have increased or what?
Yes. So particularly we have in Europe, Amsterdam is looking at a increasing 30%. Heathrow, which is a major hub, is looking at increasing by about 2.3 billion, increasing the charges next year. And air service providers, which are navigational service, if you're flying in the aircraft, you pay for as you go through each country. So you're paying, and that charge is going to increase. And European Union, each air navigational service provider is owned by the government, and they're looking at increasing their charges over the next 2 to 3 years. That's going to be incremental cost to travel. And the tickets, which you rightly said, that the passenger will pay. But is this the time we need to increase the tickets where we're still grappling with lots of challenges and trying to actually make the travel public
more attractive?
More attractive.
Exactly.
There's lots of travel hesitancy. We've actually been, we're still grappling with that. With lots of people still not opening up to travel yet. Apart from that, technology has been has actually been embraced as a form
a lot
of
of meetings and events are being held virtually now.
So we still have to make sure we're actually embracing people, make travel attractive and put the price down. So let's bring that to Nigeria. Nigeria, we've seen the travel market bosom in the last few domestic
quarters, yes.
in the last 2-3 quarters. But the international has actually been challenged. Why so? We have about $143.8 million being trapped within Nigeria for obvious reasons. We don't have forex to actually fund the money for international tickets that are being bought in Nigeria for the international airlines to remit their money back to the country, because they don't need all those funds for the tickets sold here to be used in Nigeria. So this money needs to be remitted back to their home countries for their operations, to take over loans for their for other things. But we actually have that money stuck here. That's for international players. Now for the domestic, we have challenges of sourcing foreign exchange for our domestic operations. Yes, we see the flights full, but at what cost? Dollar that we bought at about a certain rate in January, it's ranging about 580, and there's no forex official forex to actually take care of the dollar operations for domestic airlines to operate within Nigeria.
I don't think the CBN governor will be happy to hear this, because I mean, from his various broadcasts and even at the MPC, he talked about the fact that the banks are getting more supply, to handle this. So is it that the airlines or the aviation industry is not going to the bank, or what's going on?
They're going to the bank, and let's start with the 143.8 billion that's been for the foreign airlines. It's still, as at August, to the best of my knowledge, it's still what it's outspending. It's still pending with the CBN, with the international airlines. So now on the domestic side, we still have a major airline that has 22 aircrafts, and 8 of those aircrafts are abroad, are being taken care of. They need to pay for the maintenance and the checks, and this needs to be funded in Forex. For the Forex availability, we're not able to match that. There might be, but the volume is what I don't think we're able to meet at this time. So we have that Forex challenge.
So is the aviation, do you have stakeholders having conversations with the CBN, or are you just dealing with the banks?
We have, prior to this time, we had a preferential rates, but obviously even the preferential rates are not available at this time. So hopefully with the increase in price of oil, we'll be able to have enough funding. But aviation is largely, even 70-80%, determined by Forex. Jet A1, which is 40% of our operations, is our import for kerosene, which is Jet A1 fuel, is actually imported. As at last week, it was about 300 naira per liter of Jet A1. And you have to fill all your tanks. So if you're looking about 40,000 liters to Abuja and another 40,000 liters averagely back to Lagos, that's a huge cost at 300,000. And that is if you're doing Abuja. If you're going to uplift your fuel in Maiduguri, it's higher cost. So that's just the operational part. Then we start talking about maintenance, spares, all your training, capacity improvement. All these are domiciled in Forex, and we don't have that Forex. So that is actually affecting operations now. So what should be done? I don't like just reeling out the challenges.
Exactly, yes.
What should be done at this point? It's the fact that let's open up the economy. Yes, we're talking about a lot of hesitancy about people traveling. Yes, COVID is the new reality. How do we live with travel post-COVID? Now we have lots of travel restrictions. We have had since, I think, April, lots of restrictions from major countries. For example, India, South Africa, Turkey, and
You still have the one with the UAE.
Yes, we still. So we have all these restrictions. Don't forget that, according to the Nigerian Bureau of Statistics, the Turkey and South Africa, Turkey has about third quarter of 2020, exports from Nigeria was about 5%, and South Africa at about 6.28%. If we're looking about 11% of our exports, which is foreign exchange that we need at this time from these countries, why don't we open up within guided, following best practice guidelines, so that we can have people from these countries, which are, by the way, highly vaccinated, have low rates of COVID infections, so that we have a very calculated and evidently a good platform for them to actually see people come in, isolate, and well treated, and they can do business, and we can improve the foreign direct investment.
Or is it that we don't really trust our enforcement system at the airports?
Well, it's not. If we're having lots of the inflow, we ensure that the enforcement system, the ecosystem, is not just the airport. We see the airline, and they were actually being penalized by putting a $3,500 penalty. And they ensure that those that have had double vaccinated and those that have the right papers come into Nigeria. But we need this investment at this time.
So maybe the government is also, working on, is it the retaliation policy or something? For instance, that the UK have said, even when you are double vaccinated from Nigeria, you still get to the UK, you have to isolate, and things like that. Perhaps those are some of the things guiding the government's decision not to fully open up.
Yes, it's what US has actually put as a prerequisite, as a guideline for those coming to US from Europe as well. We live in a global environment. What has been the solution? The solution is for Nigeria to have a platform, a database of those that, one, from end to end of the vaccine as it comes in. Who takes that vaccine? It's automated, and it's actually linked into a database. IATA has one now. It's called the IATA Travel Pass. So that once your vaccine and your card is registered on that application, you can travel globally and you don't have to be isolated. That opens up travel markets globally. That actually ensures that you don't have to isolate.
So what I hear you say here is, perhaps are you saying that Nigeria is not managing its vaccinated individuals' data well? We're not sharing it, or we're not linking it. Is that why you think that
that data should be it should be validated and justified through a process,
okay,
whereby that process can integrate either to basic processes across global entities, and this is what will make people be able to
so why
verify.
are we not doing that?
So we're not reinventing the wheel.
Yeah.
You remember when we had security challenges of Abdul Muttalab?
Yes.
We called the Advanced Passenger Information System. We still actually, it's now part of us. When you're traveling to the US, when you buy your ticket, your information is actually sent from the airline's travel system to a home security system to verify that you're not a threat to their system. If you're a threat, they would not let you even board from here. So it's the same mechanism. It's the same process. Have a system, a verified automatic system here that is verified. And you're able to actually verify that system with international known system. And then you're able to prove that those that are vaccinated, and it's the real vaccination, because we have the black markets. It's the reality.
We have the black market of vaccine again.
Yes. We have the black man, and it's not just Nigeria. We saw that being destroyed in South Africa the other day.
Yes.
So it's when people say it's Nigeria, no, we have it across globally. So it's just a human natural tendency. But we actually put this as the front burner of the Nigerian way. We have the good, it's 80% good in Nigeria. So let's have that 80% push forward to the front burner, and we actually have to have these people show that they're vaccinated. They can go into Britain without isolation.
Whose responsibility is it to push for this?
I believe people always say government. We are the government. The government entities, MDAs, which the entity that takes care of the vaccination, the Nigerian Civil Aviation Authority, because we're the travel. The Port Health is part of this. And it's just a coalition of all these government entities, because at the moment, the Presidential Task Force is actually has that responsibility at the moment. So the Presidential Task Force can take this as one of the roles to make sure that this is done, and that opens travel to Nigeria, in and out of Nigeria for Nigeria.
And that will also help our foreign exchange situation.
Exactly.
I mean, because if we're able to open up, then we can have more forex, and hope we don't get blacklisted.
Exactly, and we need to meet up that World Bank numbers of 2.4. So it's not just numbers.
It's not just a number.
It becomes a reality.
Well, we do hope we'll meet up. Thank you so much, Mr. Ojuri. Mr. Tayo Ojuri is a managing partner with Aglo Aviation Support Services Limited. Thank you so much for sharing your thoughts with us this morning.
My pleasure.
So after the break, commodities market update is next. And he talked about the World Bank growth forecast. We'll also mention that. So stay with us. It's Business Morning on Channels Television. You're welcome back. According to data from the United States Department of Agriculture, Nigeria is the 5th largest palm oil producing country with 1.5%, which translates to 1.03 million metric tons of the world's total output. Just before anyone celebrates this, let's remember that Malaysia, palm oil production, the second largest producer of palm oil in the world, they got the seed from here in Nigeria. So just before we celebrate that, we are the 5th largest. Well, to talk about this and other issues in the commodities space, we have Dumebi Yeke joining us again, the second time this week. Dumebi, good morning.
Good morning.
Good to have you.
Thank you.
Okay, so being the 5th largest producer of palm oil is good, but what about the value chain? While that's not, we shouldn't be celebrating that because, we fed Malaysia, and now Malaysia is the second largest in the world.
Yeah, so currently Malaysia and Indonesia account for about 80% of global output of palm oil. And Nigeria, like you rightly said, is now the 5th largest producer of palm oil, but just accounts for a meager about 1.5 to 2% of global output. Now, in the palm oil production industry for Nigeria, there is currently a supply deficit, and that's because the current supply is not able to meet demand. Actually, Nigeria, not only being the 5th largest producer, is actually now a net importer of palm oil, meaning that we actually have to import to meet local demand of this, to meet local demand of palm oil. Earlier, when the CBN released its import restriction list, palm oil was on that list, but as of June this year, they had to not exactly take it off, but at least allow for some importation of palm oil so that the domestic price of palm oil is reduced. We have several states in the country that actually produce palm oil, but the problems for the value chain and production and increase in output cuts across various states, from the seedlings to poor storage to insecurity, all of these factors affecting the palm oil industry in Nigeria. And globally, the price of palm oil has increased, by about 5%. It's currently really high, about 1,280 metric tons per dollar right now. And with this increase in global palm oil price, coinciding with the fact that Nigeria is a net importer, it simply means that Nigeria's import bill on palm oil is also going to increase, and that's going to feed into the domestic price of palm oil. Palm oil in Nigeria is used for so many, meals. We use it to make stew. We use it to, make a special jollof rice or concussion rice. People use it for soup. So, and definitely that's going to
and even the production process, provides a whole lot.
Exactly.
Even for cosmetics.
Yes, palm oil is used for that. So, I'm talking about the value chain of palm oil within the country. Clearly, with the rise of the cosmetic industry within Nigeria, we're seeing, a lot of cosmetics entrepreneurs coming up, and with the price of, a major raw material input like palm oil is going up, we could see the price of, such products go up, such end products from palm oil increase as well.
Sometimes as a Nigerian, you just wish that maybe there should be a focus on, let's look at palm oil, for instance, and let's follow up the value chain, and let's right all the wrongs in the process, and let's maximize this potential.
Yes, but we can say that, but when we look at it economically, right, in theory, you can say, okay, handle this, handle that, but running an economy involves you having to do a lot of things simultaneously. Now, where as economists or as analysts, we now look at is where you now actually pump more money. So that's where the wisdom in handling an economy comes in. So where do you generate more money? That's where we talk about comparative advantage. So where can I make more money from? And that's where you should drive investments into, so that you can make more money to stimulate other sectors.
So is that why we have oil still dominating the economy?
Well, we can say that could be one of the reasons. But right now, from what we've seen and how the economy is really susceptible to oil price shocks, we can't exactly say that Nigeria has a competitive advantage in the production of oil, because our oil production is not exactly high. There are other countries that do a lot more in terms of oil production and also benefit from when prices are not even as high as $80 per barrel. So I wouldn't say Nigeria has an absolute or competitive advantage in terms of the production of oil. But what I would say is we need to balance it out. We've been on this talk of economic diversification, diversifying our revenue base, so that we're able to pull revenue from other sectors and other commodities that could, substantially boost economic growth. So that talk is still going to be there until we make substantial impact in terms of boosting Nigeria's revenue from other potential sources, especially the agricultural manufacturing sector. We'll keep dancing within this, And
I guess this is where the PPP comes in. I mean, if the private sector is incentivized I mean, I think there are so many people who would want to. The government doesn't have to do it on their own.
Yes, yes, exactly. Private-public partnership is a really good way to deepen competitiveness and actually make a lot of these sectors efficient. But we just have to keep our fingers crossed to see that, to make sure that
Fingers are so
happens.
crossed.
Yeah, fingers have been crossed for a while and will keep being crossed until we see substantial impacts in a lot of things. Yeah.
Okay, all right. So also there's the World Bank raising its forecast. But
Yes.
like our last guest said, that we hope this doesn't just end, with the numbers
paper,
saying
yes.
that it's 2.4. But what are some of the drivers, to this growth in this forecast, and how do we make it a reality?
So the World Bank hinged its revision on the fact that they're still accelerating growth in Nigeria's service sector. We've seen the trade sector improve. We're seeing so many other sectors, improve. From the last GDP report, we're seeing that the economy, both on a nominal and real basis, is actually improving. Even though we could, by the time we discount for like the base effect, would see that, okay, there's still a lot more work to be done. But clearly, from where we were as at this time last year and where we are now, there's some level of improvement. And this...
Sorry, is that improvement, or we're just coming back to where we were?
To an extent, we can say that, but at the same time, we can also say that there is some level of improvement. The reason being that the COVID-19 actually exposed a lot of loopholes in the economy, and several industry captains have actually sat down to revisit their models, revisit their business models, and are making substantial changes. So yes, we're not exactly where we want to be, but we can actually say that there was some level of improvement in terms of how businesses are now being conducted. Even though, there's still the issue of Forex, there's still the issue of this, but businesses are, actually sitting to re-strategize and make things work better. I mean, going to work every day, some people are actually working, a few times, having to go to work a few times a week, and productivity
doing the others virtually.
and productivity is still, improving. So, basically, we're saying that there's some level of, it might be marginal, or it is marginal rather, but there is some level of improvement.
All right, obviously Nigerians would just hope that it's not just 2.4% in paper, but we can actually go out there, and then in my everyday life, I can actually feel
the impact. Yes, yes. There's the hope of a trickle-down effect of growth. So fingers crossed again. So fingers crossed again that this actually
I won't be crossing our toes in the nearest future.
No, we won't. I promise that we won't.
Then the president is set to present the budget today, the 2022 budget, 16.39 trillion naira, and it has 635.4 billion naira deficit. So there we go, we're borrowing again.
Yes. So talking about the budget now, and the fact that the expenditure is actually up about almost 17%.
Yes, 17.67.
Yes, 17. So it's really high. But if we take this back to some economic theory, we'll say that, okay, this is the Keynesian approach to boosting the economy. Now, the Keynesian approach, the Keynesian theory says that during the time of a recession, or if an economy is struggling, it's expected that the government would increase spending to boost consumer demand, and this would also cut taxes to also boost the supply of jobs and all. So we're not exactly going in the wrong path. So what we're saying is that we are trying to for some reason, boost, stimulate the economy. So this is an expansionary fiscal policy moving towards stimulating the economy, boosting consumer demand, boosting output growth. So it's expected whenever the economy is in this, direction, that they would boost government spending, and that would in turn, boost consumer demand and stimulate the economy towards growth.
So you're in line with what the Minister of Finance has been saying, even though our borrowing is 23% of GDP, 97% of our revenue goes into servicing debt. So, we're in good stand.
I wouldn't say good stance exactly. I would say that for the revenue, right, for the increase in expenditure, that's a good stance, right? That's because we're trying to stimulate the economy and boost output growth. Now, when we get this money, where we put the money into is another thing entirely. If we say we borrow this money to now, keep financing or keep servicing debt, or we keep using it for recurrent expenditure, that's going to have a ripple effect on the economy.
But that's what we're doing mostly, because
exactly. So yeah, but what I'm saying now is this: having an expansionary fiscal budget is good, in the sense that it should, stimulate, by theory, it should stimulate the economy, boost consumer demand, increase job opportunities. That's if the money that we're getting is going to be spent on the real sector. But if we're getting the money to just,
pay salaries and other...
we're just going to remain in this loop.
And we're still asking, I mean, we just had a successful Eurobond outing.
Yes.
We're looking...
I mean, so there is that conversation, but let's also not forget that we're still in a low interest rate environment. And as the global economy rebounds, global interest rates could increase, and this could also increase Nigeria's debt service cost. So there is that risk. So, but the truth of the matter still remains that if we're able to get these monies and then pump these monies into the real sector to boost, economic growth and output, we would see, substantial increase in the economy.
All right, Dumebi, thank you so much for your time this morning.
So much
and we'll keep our fingers crossed
again
and hope that very soon we can uncross them.
Yes.
All right, thank you so much and enjoy the rest of your day.
Thank you. You too.
So we'll just take a moment now. When we come back, we head to the markets. To stay with us. Bullish sentiment continues in the equities market. Good news for Will and I. I don't know if that translates to some money in my account, but I know I'm happy to report good news, Will.
Yes, Sini, good morning. Definitely good news. And we have, I think we have crossed our fingers in the equities market.
In the equities market, for now.
For now. So the equities market traded positively for the third straight session, thanks to investors' interest in stocks of First Bank, Lafarge, and Zenith Bank, which drove the all-share index higher by 0.12% to 40,765.2 points, and the market capitalization gained an additional 26 billion naira, with the month-to-date and the year-to-date gains increasing to about 3.9% and 1.2% respectively. Over to the activity chart there, we saw that there was a decline, however, in the volume traded yesterday, but value was up from 3.13 billion naira to 3.48 billion naira, an exchange in over 5,000 deals. Across the sectors were mostly negative. Banking and the consumer goods, industrial goods indexes were up, and I would say that the banking index narrowly escaped the bearish trend there, because thanks to First Bank, which shares has been hot for some days now. The share price rose by about 8% yesterday. Well, we'll quickly flip over to the fixed income market, where bullish sentiments, well, it was kind of a mixed sentiment there, but to give us more insight about that, we have Caleb Alimi, fixed income dealer at FSDH Merchant Bank, to tell us more. Good morning, Caleb.
Good morning.
Activities in the fixed income market have been quiet for some time now. However, we observe some ups and downs with respect to yields. What's driving this, and do you expect the market to remain choppy?
Okay, thank you for that. So let's call that choppiness a bit of volatility. The volatility in that space has been due to a flurry of activity on the supply side. A lot of things are happening on the supply side of the market, and then the trends are becoming a little unclear. For example, we've seen the DMO consistently oversell the NTB auctions, especially on the one-year side. But in the last 2 weeks, there's also been very little supply of OMO maturities, of OMO securities. We expect that choppiness will probably continue until next week, when there is a fresh supply of securities for NTB, and also we expect that there will be OMO supply as well. These two activities will kind of like stabilize the market, give us securities to trade, and just satisfy investors' appetite.
Okay. We said that the DMO has just released the bond issuance calendar for the last quarter of this year. But from that calendar, we observed a drop in the amount on offer compared to the third quarter calendar, especially for the 2050 bond paper. What is the reason behind this, and what does this mean for the fixed income markets?
Okay, so I mean, before now, the DMO had offered around 450 billion of securities every quarter, and then for this quarter, they seem to have dropped it to about 400 or thereabouts billion. Reason being that it's Q4. Typically, we notice that they typically wind down the activities into Q4. We always observe that the issuances in the last quarter of the year often smaller than the rest of the year, and that's because at the beginning of the year they would have front-loaded on their targets, so they are almost at their targets for funding, and so they typically just wind down. Another reason is they replaced some of the papers because the amount in issuance is also very large, so they just want to wind down those issuances so that in the future, when our children are paying back the debt, they don't feel too much of the burden.
So how will this affect investors? So fine, we don't want children to pay the debt. But how will this affect investors?
What that will mean for us is we will expect that there will be a bit of a rally on the bonds market because of a fewer supply, because of the smaller supply. So the bonds at the moment are available. There will be a lot of demand for them. As investors still need to plug their funds, for this year. They need to have, they need to meet their targets of investments for this year. So what will happen is the fewer the paper, the more the demand, and then that will just drive bond yields lower.
Okay, we see that the 2036 bond was one of the most sought after in yesterday's trading session. It was up 6.2 billion there, but there's a perceived reduction in supply after it was removed from the calendar. Can you give us more insights into this?
So that's a bit of technical trading, in the sense that we have some investors who, in anticipation of higher rates, in anticipation of increased supply or consistent supply of a particular maturity, do what we call short selling. Now, once that paper is not being made available again, if you are short sold, then you have to cover that short position. So what we find is investors are scrambling. Investors that have gone short on that paper are beginning to scramble for it because they now see that there's going to be no more supply of that paper from the issuer. That's what's happening. So they are coming to the secondary market to cover those short positions. That's why you saw a spike in the demand for that paper. It's expected to continue as market is net short on that paper.
Thank you so much, Caleb, for your input on the program. So that's what we have here. We're talking about the quietness in the bond market, in the NTB market. We will expect an OMO auction next week, and hopefully liquidity will be boosted in the market as well.
Yeah, we'll certainly look forward to that OMO auction next week. Well, thank you so much, Will. We'll take a break now. When we come back, we'll do an opening call to London. Do stay with us. You're welcome back. Well, the hike in gas and energy prices in the UK and most of Europe has been a source of serious concern for weeks now. And now there's the Russia's Nord Stream 2 clearance. How will this affect the situation? We have Juliana joining us from our London studios for the details. Hello, Juliana. Good morning.
Good morning, Ine.
So analysts are saying that energy bills could rise to hundreds of pounds next year. But there's also this effort from Russia. What's the update? How is this affecting the UK?
Well, it's a big story, as you said. It's been a big story for the past couple of weeks, but particularly here in Britain, where the cost of living is becoming a huge political firestorm, especially because, unfortunately, it wasn't raised by Prime Minister Boris Johnson at the annual Tory conference yesterday. According to some experts, because of the surging rise in gas and energy prices, this is likely to trickle down to consumers by next spring, where you could be paying an extra £400 a year, which would take the average cost of an energy bill per year in this country to £1,600. That's a massive amount, a third higher than it is at the moment, and it's only just been raised. It's just been raised this month, but the reason why they say it is going to rise even further is because the energy regulator Ofgem, when it comes round to talking about the maximum price cap, that's happening in February, and they believe the energy regulator Ofgem will be forced to raise the prices. Now, as you said, finally we stopped starting to hear from the Russian President Vladimir Putin. He believes that, that he isn't playing politics here, that they have been delivering via Ukraine the contracted amount of gas that is supposed to be coming into the EU. But of course, there have been colder winters. We know that demand from Asia is soaring. So apparently, he will up what is needed. But this may not help the UK because, of course, we are affected more deeply because we rely on natural gas and energy to heat our homes more than we do for our European counterparts.
Wow. Well, now we're still talking about house prices in the UK as the stamp duty tax break comes to an end. Now, house prices have risen to the fastest in almost 15 years, and that was for September. Could this bring a permanent change to the taste and demands of Brits?
Well, I suppose if you're a vendor, you would like that to be the case because you're obviously earning more money. But for the millions of people that are trying to get on the housing ladder, it's not great news. I've tried to do the calculations in Naira, but because of the fluctuating Naira, I can't tell you how much it is there. But in pounds, I can tell you the average cost of a UK home is £267,587. As I always say, if you want to live in London, you can double that price. So just in 1 month, the average cost of a UK home has risen £4,500. That is a lot of money, and a lot of economists had been predicting that the housing bubble would burst. It's not bursting yet, and this is likely to do with the stamp duty a tax break. Yes, it was cut short, or it began to taper at the beginning of September. But there are still benefits, and people are grabbing those benefits as fast as they can, which is why there are less houses on the market, and so prices are rising. And it is a lot to do with the pandemic. Lots of people started changing their vision, looking at what they wanted. They wanted more space, which is why the data from Halifax has also confirmed that for detached properties and semi-detached properties, those house prices are rising much faster than they would for flats. So what's going to happen? We don't know. We're going to have to use that famous phrase in business. We'll have to wait and see. But certainly for people trying to get on this housing ladder, these price rises are worrying.
Yeah, they are worrying. Price rising trend in the UK and the world. I mean, it's not just in the UK. Well, thank you so much, Julian. I will talk to you later at 1:30 during Business Incorporated.
Thank you.
So let's head to the crypto space now. And the bullish sentiment in the equities seems to have spilled over to the crypto space as the bull continues to run in that space. Further gains for investors as indicated by a 3.11% in the market cap, which is now over $2.28 trillion. The total crypto market volume over the last 24 hours is $147.27 billion, which makes a 23.88% increase, almost 24% in 24 hours. Well, that's some good news. The total volume in DeFi is currently $19.82 billion, which is 13.46% of the total crypto market in 24-hour volume. The volume of all stable coins is now $115.01 billion, and that's 78.09% of the total crypto market in 24-hour volume. Bitcoin price is currently, as at 8:40 a.m., that was when this figure was computed, it was at 54.69, $54,698. That's what it was at about 8:40 a.m. Of course, by this time, it's changed. That was 6.21% increase in 24 hours. And earlier, it actually went higher than this, went more than 55. That was much earlier today. Bitcoin's dominance was 44.97%. That's a 1.15% increase over the day. At the same point this morning, it was about 49%. 24-hour volume 24 hours ago was $49.15 billion. That's much higher than yesterday. And then moving away from Bitcoin now, the king of alts, Ethereum, is also enjoying the bull run, 3.11% up in 24 hours, going for $3.569.51, while the 24-hour volume heads to $50 billion. Well, looking at the gainers and losers for the day. Now we have a lot of altcoins are doing very well this morning. The bullish sentiment spreading all over. Binance Coin moved from the decliners list to the gainers this morning. It was going for $443.78. That's up 2.31%. Cardano, almost the same percentage up. XRP, Solana did not gain that much, much less than 1%. It cost $157.77 this morning. Dogecoin moved to the red this morning. Avalanche is still on the red list also, 2.7% shed. And Binance SV was going for $151.72 after losing almost 1%. We have Solomon Amunde now to join us and react to some of these movements in the market. Hello, Solomon. Good morning.
Good morning, Mimi.
Yeah, so let's leave Bitcoin to rest a bit. Ethereum is consolidating gains and it's surged past the 3,550 resistance level. Do you see any correction in the horizon, or do you see a continuous bull run?
Yeah, Ethereum is actually yet to move. It hasn't really made its own move. And Bitcoin has actually hit its 45% market dominance. So next Ethereum should rally up to about 3,800. So basically I'm expecting Ethereum to hit between $3,800 and $4,000 this weekend.
That's a lot. So if you're a holder, then this is a good time for you. You just hold. Do you get ready to sell, or do you see a continuous holding? Which do you think is a better move?
No. Actually, for holders, it's actually a time for them to actually buy more and hodl, because Ethereum, like it or not, would hit $10,000 within the next 5 to 6 months. Yeah.
You don't see any correction in 5 to 6 months, Solomon?
Yeah, there will definitely be ups and downs, minor corrections, 5%, 15% corrections, but it will still hit its $10,000 mark.
Okay. And then what's going on with Cardano investors in Japan? Authorities report that investors had underreported their taxes from their trading activities.
Yeah, unlike in Nigeria, in other developed countries, traders are being taxed on profits being made while trading cryptocurrencies. So in Japan, most of the traders were filing that they didn't really make profits, and we all know that Cardano has done more than 800% this year. So the authorities got to find out that most of the traders were in profits, but they lied about their earnings, that they were in loss. So that's why they're actually clamping down on all of them, and they are trying to make them pay their tax as fast as possible.
So, Solomon, you won't mind paying tax on your investments in the crypto space in Nigeria?
I mean, as long as the environment, the infrastructure, and the network is there for traders, there's nothing wrong paying 3% or 2% as tax to the government. But when the network is bad, I mean, here traders, we suffer from very bad network, so it becomes kind of difficult to actually pay tax because we're not really enjoying much.
Well, I guess when you pay the tax, then they'll have the money to make the network better.
Well, that's the other way around.
All right, Solomon Amunde, thank you so much for sharing your thoughts with us this morning. Enjoy the rest of your day.
All right, thank you very much.
Yeah. So that's it on the program today. Thank you so much for being a part of it. We'll have updates from the world of business at 1:30. That'll be when we'll be having Business Incorporated. So do join us then. I'm Ini John Mekwa.